Hey everyone, and welcome back to Talk Tickers.
You bet.
For today's deep dive, we're going to be looking at NXP Semiconductors.
All right.
Their earnings call for Q3 2024.
Yeah, definitely a lot to unpack there.
NXP, just for our listeners who might not know, they are a big player in the semiconductor space.
Huge.
Third largest European chip maker.
Mm-hmm.
Headquartered in the Netherlands.
That's right.
And their stock, NXPI, well, it took a little bit of it today.
It did.
Closed down over 5% after the call. So we're going to try to figure out what's going on there.
Yeah, because it's interesting, right? The stock's down, but the call wasn't all bad.
Yeah.
Actually, they beat on revenue.
Oh, yeah?
Yeah, pulled in $3.25 billion for the quarter.
That's pretty impressive.
Yeah.
Especially considering how things have been globally.
Exactly. Global slowdown. Everyone's kind of feeling the pinch.
Yeah. Everyone except, it seems like, NXP in China.
Yeah, that's right.
Particularly in the automotive and mobile markets there.
Huge growth there.
Yeah, bucking the trend.
Everyone else is struggling in China. They're doing great.
Yeah.
Their CEO, Sievers, even called out the strength in Asian automotive markets, particularly China, during the call.
Yeah, all right. So beating expectations on revenue.
Uh-huh.
And we also saw their operating margin beat guidance as well.
Yeah, came in at a healthy 35.5%.
That's pretty good.
Really efficient operations, even in this kind of tricky market.
So what are they doing right? What's their secret sauce here?
Well, if you look at what Sievers was talking about on the call,
Okay.
he was really emphasizing their proactive approach to inventory management.
All right.
We're keeping it lean.
Okay.
Only about 8 weeks worth of inventory.
Oh, wow.
Which suggests that they're, really watching that demand.
Right.
Don't want to get stuck with too many chips.
Right.
If the market weakens further.
Yeah, they're being cautious.
Exactly.
Right.
And they're anticipating that customer inventories are going to deplete. So that could set them up for a nice rebound when things turn around.
So they're playing the long game.
Yeah, I like that they're playing the long game.
Building a solid foundation.
Yeah.
While everything else is kind of going crazy.
Mm-hmm.
And it makes sense given their focus, particularly on things like electric vehicles and software-defined vehicles.
Absolutely.
I mean, that's just going to continue to grow.
Huge growth areas.
Yeah.
It's not just about riding the current wave. They're looking ahead, trying to anticipate the future and shape the future of the industry. And a lot of that is through their innovation.
Okay.
Especially with the S32 processors.
Right.
These microcontrollers designed for automotive applications, advanced driver assistance systems, electric vehicle control.
Right. So that kind of explains why they're winning in areas like radar as well.
Exactly. It's all connected.
Yeah.
But of course,
There's always but.
always a but, right. Every earnings call
Oh.
has a little bit of,
The bumps in the road.
bumps in the road, yeah.
What happened?
So it seems like the slowdown kind of finally caught up with them a little bit.
Oh, no.
Yeah, August, September timeframe, sudden slowdown hit them pretty hard.
Okay.
Started in industrial and Internet of Things markets, so like the industrial IoT,
Okay.
particularly Europe and the US.
Okay.
But what's concerning is that it seems to be spreading the Western automotive sector.
Oh, that's got to be a big concern for them.
Big concern. That's their bread and butter.
Yeah.
And in fact, they had to revise their Q4 revenue guidance
Downwards, I'm assuming?
down to $3.1 billion,
Okay.
which is a 9% drop compared to last year.
Oof, that's a lot.
Yeah, not great.
So what's driving that slowdown? Did Sievers say anything about it?
He did.
Okay.
Pointing to a couple of things.
Right.
One, this thing called the Purchasing Managers Index.
The PMI.
PMI, exactly.
Yeah.
It's basically a gauge of how the manufacturing sector's doing.
Okay, so it's like a canary in a coal mine for the economy.
Yeah, exactly. You got it.
Okay.
And when PMIs are contracting, that means things are slowing down.
Right.
And that's what we're seeing.
Okay.
Another thing
All right.
is that a bunch of OEMs
Original equipment manufacturers.
exactly
Right.
have issued profit warnings.
Oh, interesting.
So these are the companies that actually make the cars, other products
Right.
that use NXP's chips.
Okay.
And when they're struggling,
Oh,
it ripples down to NXP.
right. So it's like a chain reaction.
Chain reaction, bad news.
Bad news, but hold on.
Yeah.
That slowdown started in industrial and IoT, not automotive.
Mm-hmm.
So why are they being hit so hard in automotive now?
So in addition to all that economic worry, right,
Okay.
There's something else going on in automotive specifically.
Okay.
It's called inventory digestion,
Inventory digestion.
which is basically the tier one automotive suppliers,
Okay.
the companies that provide parts to the car manufacturers.
Okay.
They're getting more cautious about holding inventory. They're a little nervous.
Okay. So they're being more cautious.
Yeah.
Demand's going down. Double whammy.
Double whammy, exactly.
So how are they responding to all this pressure?
Well, one thing's for sure.
Okay.
They're not interested in a price war. They're not going to slash prices
Nope.
to gain market share?
Nope.
Wow. Okay, so Sievers was pretty clear about that on the call.
Yeah. Adamant.
Yeah.
Said they'd rather exit product lines
Wow.
than slash prices.
That's bold.
It is.
Especially when you think about just trying to grab whatever sales you can.
Yeah. Tempting. Right.
Yeah.
But they're not doing it.
So they're confident in their products,
Absolutely.
confident in their strategy.
Long-term focused,
Uh,
not just reacting to the current headwinds,
I like it's
sticking to their guns.
sticking to their guns.
Yeah.
So they're essentially saying, we believe in the future of automotive and industrial IoT,
Mm-hmm.
and we're not going to sacrifice our long-term value for a quick fix.
Exactly. Exactly.
Yeah.
All right. So we've got a company that's exceeding expectations in a tough environment,
Yeah.
but also facing some pretty big headwinds and a slowdown that seems to be spreading.
Yeah, it's a mixed bag for sure.
It is. It is.
Mixed bag.
But before we jump into the broader implications of all of this,
Yes.
gotta have a little fun.
Oh, no.
You know what's coming.
Here we go again.
It's time for This Is Not Financial Advice, but It's Fun to Think About.
Oh, boy.
The segment where we just throw all caution to the wind and brainstorm some wild trade ideas.
All right. Just to be clear, everyone, this is all hypothetical,
Of course.
purely for entertainment.
Yeah, don't blame us if you try this and it goes horribly wrong.
Do your own research, folks.
Right. Solid advice as always.
Thank you.
All right, so we've got NXP dealing with this slowdown, especially in automotive,
Right.
and they're refusing to budge on price.
Mm-hmm.
What if we look at this from like a contrarian perspective?
Yeah, I like where you're going.
What if this slowdown, this reluctance to buy, this inventory digestion, actually creates an opportunity? What if we buy the dip?
Whoa, hold on there, partner.
All right.
I see your point,
Okay.
but let's not get too excited.
No.
Remember, they just lowered their guidance for Q4.
True.
So,
True.
yeah.
But they are emphasizing their long-term strategy, their commitment to innovation. They do seem confident in that eventual rebound.
That's all good, but Mr. Market tends to focus on the short term. The
Right.
short term doesn't look great.
Yeah. So maybe a straight up buy is a little too aggressive right now.
Yeah, maybe.
What if we get a little creative?
Okay, I like creative.
What if we look at options?
Okay.
Specifically, what if we consider selling put options on NXPI?
Now, that's an interesting idea.
Right.
For those who aren't familiar.
Yeah, explain it.
Selling a put option basically means you're betting that the stock price won't fall below a certain level.
Right.
If it does, you're obligated to buy the stock at that price.
Exactly. So we're basically saying we think NXP might drop a little more
Mm-hmm.
in the short term, but we're willing to buy it at a lower price
All right.
if that happens.
Right.
Because we're bullish long term.
I see.
It's like setting a limit order, but we get paid to do it.
Yeah, that's a good way to put it.
Right.
But it does come with risks.
It does.
If the stock really tanks,
Yeah.
you could be left holding the bag.
At a pretty bad price.
Yeah.
All right. So again, hypothetical scenario.
Hypothetical.
Just a way to think about it.
Exact.
Not saying this is the right trade
for anyone.
for anyone.
Yeah.
And remember,
Yes.
options trading can be complex,
Very complex.
involves significant risks.
Yes.
Do your research.
Please.
Understand what you're doing.
Yeah.
And talk to a financial professional
Good advice.
before making any decisions.
Couldn't have said it better myself.
All right. I think we've sufficiently muddied the waters with our not financial advice.
We did it again.
We did it again. Speculation.
Yeah.
Let's take a break and come back in the next segment to explore the wider implications of NXP's earnings call for the semiconductor industry as a whole.
Sounds good.
Stay tuned.
Welcome back to Talk Tickers.
So before the break,
Yeah.
we were really getting into the weeds
Mm-hmm.
of NXP Semiconductors Q3 earnings call.
That's right.
picking apart their performance, their strategy.
And trying to figure out what it all means.
Yeah, and then, of course, we had some fun
Of course.
with this is not financial advice.
Never disappoint.
Threw around some trade ideas.
Some hypotheticals.
But now we're going to zoom out a little bit.
Yeah, bigger picture.
NXP's story is not just about NXP.
It's about the whole industry.
It tells us about the semiconductor industry.
Absolutely.
So what does it tell us? What's the state of the global chip market right now?
Well, one thing that really stands out to me is this whole dance between supply and demand.
Mm-hmm.
Remember how Sievers was talking about NXP's, really tight control over inventory?
Yeah, they were really focused on that.
Yeah, both internally and in the channel.
Yeah, they don't want to get stuck with too much inventory if demand drops further.
Nope. They're walking a tightrope that want to meet demand,
Right.
but not be left holding the bag if things slow down.
It's a delicate balance.
It is.
And I think that cautious approach really reflects what a lot of chip makers are thinking right now.
Yeah, I think you're right.
The industry went through that huge boom during the pandemic,
Insane demand.
followed by all those supply chain problems.
It was a mess.
And now it feels like things are rebalancing,
Yeah, correction.
demand softening. Customers are working through the inventory they have.
Exactly. It's like a pendulum swinging back.
Yeah, from one extreme to the other.
I like that analogy.
And NXP's stance, that tight inventory management, it's like they're preparing for a longer period of softer demand.
I think that's a very astute observation.
And it's not just them, right? Their comments about inventory digestion at the tier 1 auto suppliers.
Oh, yeah, that was telling.
Those are the companies supplying the car makers.
Direct line to the OEMs.
And if they're being cautious, it means this adjustment period could be a while.
It's not just going to be a quick blip.
And that has implications for everyone in their supply chain.
Oh, yeah, all the way up and down.
From the raw material providers to the equipment makers.
It's a ripple effect.
It's a ripple effect.
Throughout the entire industry.
And this brings us to another takeaway, I think, from their earnings call.
Okay, what's that?
Specialization differentiation. You're talking about that decision to prioritize profitability over market share.
Exactly. They're not going to get into a price war.
Even though it's tempting, I'm sure.
Oh, I bet. Especially when demand is weak.
Yeah.
You just want to get those sales.
You want to grab whatever you can.
But NXP's saying no.
They're betting on their specialized products, their strong customer relationships.
Yeah, they've got good relationships.
And their focus on high growth areas.
Ugh, smart.
Like automotive and industrial IoT.
Long-term vision.
So it's higher risk, higher reward.
I think so, yeah.
They're saying, we're not going to be everything to everyone. We're going to be the best at what we do.
Right.
And that's how we're going to win.
Exactly. And that's a message that goes way beyond semiconductors, by the way.
Oh, it's a business lesson.
In any industry, when times are tough,
Yeah.
you gotta differentiate yourself.
You got to offer something unique.
Provide real value.
You know what they say?
What's that?
When the tide goes out, you find out who's been swimming naked.
That's a colorful analogy.
But it's true.
It is true.
Companies built on being the cheapest.
Yeah,
They're going to struggle when things get tough.
big time.
So NXP's call, it's a reminder for investors. When things are turbulent,
Yeah.
look for the companies with a clear vision, strong execution, and a real commitment to value.
Those are the ones that are going to weather the storm.
Now, we've talked about these industry-wide implications, but there's another part of this that I find fascinating.
Oh, yeah. What's that?
China.
China.
NXP's doing great there.
Even with the slowdown.
Even with the slowdown, yeah.
It's impressive.
And it ties into this whole bigger story of China's rise in tech.
Absolutely. It's a huge
We're seeing
trend.
Chinese companies like BYD and NIO
Yeah, the EV makers.
making a splash in the electric vehicle market.
Yeah, both in China and globally.
And as they gain market share,
It's going to change the semiconductor landscape.
because they need chips.
Tons of them.
And NXP,
Yeah.
with their foothold in China and their focus on automotive,
They're well positioned.
they seem like they're in a good spot.
Yeah, but it raises some interesting questions, too.
Like what?
About the global supply chain.
Right. Like, how will the U.S. and Europe respond to China's growing dominance?
Exactly.
Will we see more efforts to boost domestic chip production?
Maybe. It's hard to say.
Reduce reliance on Asian suppliers?
Yeah, that's the big question.
So NXP, they're giving us a glimpse into how these geopolitical forces are playing out
It's like a microcosm of the bigger tech competition.
between the U.S., Europe, and China.
Exactly. And who's going to win?
Who knows?
It's a complex situation.
But one thing's for sure,
What's that?
the semiconductor industry is at the heart of it.
Absolutely.
And companies like NXP are right on the front lines.
Leading the charge.
So what does this all mean for our listeners?
Yeah, good question.
The everyday investors trying to make sense of it all.
It means that understanding the semiconductor industry is more important than ever.
Oh, okay.
It's not just about the stock prices.
Right.
It's about the underlying trends,
Yeah.
the geopolitical forces, and figuring out which companies are best positioned to thrive.
It's about seeing beyond the headlines.
Exactly.
And diving deep.
Like we do here on Talk Tickers.
That's right.
Now,
Yes.
before we get too carried away with our grand pronouncements,
I have a feeling I know where this is going.
round 2.
Here we go.
This is not financial advice.
But it's fun to think about.
All right, everyone, just a reminder, this is all hypothetical.
Purely hypothetical.
For entertainment only.
Don't make any investment decisions based on what we're about to say.
Please.
Now, given NXP's performance in China,
Yeah.
they're focused on automotive. I'm wondering, is there an opportunity for a more bullish play here?
Whoa, hold on a second.
Okay.
I agree. The China exposure is a good thing.
Yeah.
But let's not forget about those macro headwinds we talked about.
You're talking about the slowdown in Europe and the U.S.?
Exactly. It's going to impact NXP, even with China doing well.
True, but what if we think long-term?
Okay, I like long-term.
The EV market, especially in China, that growth potential is huge.
Yeah, no one's arguing with that.
Maybe a long-term call option strategy.
Oh, interesting.
Betting on NXP riding that EV wave.
I see where you're going with this.
Could be worth considering.
It's an idea.
Right.
Yeah.
A long-term call option. You could benefit from NXP's upside,
Yeah.
but your downside risk is limited.
That's the beauty of options.
But again,
This is not financial advice.
this is just us playing around.
Exploring possibilities.
And remember,
Yes.
options trading is risky.
Very risky.
You got to know what you're doing.
And the semiconductor industry,
Yeah.
it's cyclical.
Oh, it is.
What looks good today
Yeah.
could turn sour quickly.
So
Proceed with caution.
do your research
Absolutely.
and never invest more than you can afford to lose.
Golden rule of investing.
So we've had our fun with the not financial advice.
It's always a good time.
But I think it's time to circle back.
Okay.
Something we haven't really talked about yet.
And what's that?
NXP's upcoming Investor Day.
Ah, yes. November 7th.
The big reveal.
You're going to lay out their long-term strategy.
Their updated financial model.
The whole shebang.
This is where we're going to get a real clear picture of how they're planning to deal with the challenges.
Yeah, those headwinds.
Take advantage of the opportunities
The EV boom.
and ultimately create value for their shareholders.
But it's going to be interesting.
So mark your calendars, folks. November 7th.
Don't miss it.
It's going to be a must-watch event for anyone interested in NXP.
Or the semiconductor industry in general.
Or the future of tech, really.
Yeah, it's all connected.
It's a chance to hear directly from NXP's leadership, get a deeper understanding of their vision.
And maybe, just maybe,
some hints about world domination.
let's not get ahead of ourselves.
Okay.
But seriously,
Yeah,
NXP's Investor Day is worth paying attention to.
that could be good.
It's going to provide crucial context for their earnings call and their trajectory going forward.
All right, so we've covered a lot of ground today.
We have.
NXP's performance, the broader trends in semiconductors,
The good and the bad.
the challenges, the opportunities,
The risks and the rewards.
and of course,
Of course.
we had some fun with the hypothetical trading ideas.
Always fun.
But remember,
This is not financial advice.
do your own research. Talk to a professional.
And never invest more than you can afford to lose.
All right, we're going to wrap up our deep dive into NXP Semiconductors with some final thoughts and key takeaways.
Sounds good.
All right, welcome back to Talk Tickers, everyone.
Back for the grand finale.
We've spent this episode really digging into NXP Semiconductors and their latest earnings call.
Yeah, peeling back the layers, trying to understand what makes them tick.
We saw their resilience in this tough market,
Definitely holding their own.
their strong performance in China,
That was impressive.
and that bold stance.
No price wars.
Yeah, no price wars. They're sticking to their guns.
Sticking to their strategy.
And of course, we had a little fun with the hypothetical trades.
Always got to have a little fun.
But now let's bring it all together.
Yeah. What are the key takeaways?
What are the things that our listeners should really remember about NXP and the semiconductor industry as a whole?
Big picture stuff.
Okay, takeaway number one.
Hit me with it.
NXP, they're like the poster child for how to navigate this current market.
It's a balancing act, right?
Demand softening, but they're playing it smart with their inventory.
Not overreacting, just waiting for that rebound.
And that tells us something about the whole industry right now.
I think so. It's like this cautious optimism.
Yeah.
But with an eye on the risks.
Takeaway number 2.
Okay, number 2?
Specialization is key.
Oh, yeah. Absolutely.
NXP is doubling down on what they do best: automotive, industrial, IoT.
Those are their strengths, and they're sticking with them.
That long-term growth potential, that's where their confidence is.
Makes sense.
And for investors, it just highlights how important it is to understand a company's core competencies.
Mm-hmm. What are they good at?
What are they really good at, and how does that align with where the market's going?
Where are the opportunities?
Takeaway number 3, and I think this is a big one.
All right, let's hear it.
China, the wild card.
Always got to factor in China.
NXP's success there, it's a sign of things to come.
Shifting tides in the tech world.
And for investors, it means paying attention to those geopolitical factors.
They can have a huge impact.
So we've got cautious optimism,
Mm-hmm.
strategic specialization,
Uh-huh.
and the ever-present China factor.
That's a good way to sum it up.
I think that's a good framework for understanding NXP and where the semiconductor industry is headed.
The good starting point.
And of course, we can't forget about their upcoming Investor Day.
Yes, November 7th.
Mark your calendars, everyone.
Big day.
It's going to be a must-watch event.
For anyone interested in NXP, the chip industry, the future of tech.
We'll be covering it here on Talk Tickers, of course.
You know it.
So to wrap things up,
Yeah, let's tie a bow on this.
we've explored NXP's performance, the broader industry trends.
Challenges, opportunities, risks, rewards.
We even had a little fun with the not financial advice segment.
Always a good time.
But as always, do your own research, talk to a financial professional, and never invest more than you can afford to lose.
Words to live by.
Thanks for joining us for this deep dive into NXP Semiconductors.
It's been a pleasure.
And we'll catch you on the next episode of Talk Tickers.
See you then.